All right, and welcome back for another episode of Carnivore Trades. Today is Wednesday, August 10th, 2022. If you're not done so already, give the video a thumbs up, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, so markets, spiders up 2% today, Q's up 2.8, Dow 1.5. Big move, obviously, on the CPI number. So coming in at only 8.5%. And, you know, that's generally kind of what the market expected. It was 8.7. It came in just a little bit lower, but the market is essentially rejoicing on the fact that, you know, the Fed may now have to slow down. There is a few problems, though. But, you know, first of all, we'll get to that in a minute. But, you know, spiders did leave kind of a little bit of a hanging man here on the daily. We had a nice, you know, I wouldn't even call this consolidation. I mean, it's kind of diverging highs here and diverging lows, but you had a nice gap up. You know, you were, I guess, consolidating beneath this area. We kind of left a little bit of a hanging man, and specifically the NASDAQ does look a little tired to me. We did not make a new high on the NASDAQ today, so Triple Q's unable to get above Monday's highs, and that's a little bit of a red flag. So if this is the most bullish news ever, I mean, right, like, think about the most bullish news for the market. It's got to be the Fed, right? Anything to do with the Fed pivoting or whatever, right? Why can't the Triple Qs take out Monday's high? You know, it's a little bit of a red flag here to me. And then the bigger red flag right now, and I was kind of tweeting about this really all day long, but bond yields here. So the 10-year basically turned back to the flat line. The 2-year, you know, was bidding up earlier and faded all those gains all the way back down, you know, basically close to the flat line. The 30-year was actually green. So if, you know, the Fed is pivoting, why aren't bonds confirming this? Bonds should be bidding hard, you know, yields should be coming back in line. The yield curve should be steepening. We still have a heavily inverted 2 and 10-year, 3-month and 10-year, or yeah, 3-month and 10-year are still close to inverting. I believe 5s and 30s. So bond market's kind of calling BS, if you ask me. So again, we'll just have to see moving forward. With the light volume, like I've been saying here, with the light volume, the market can hold up. But when the volume comes back, I think we're going to get a good sell here. We are into some resistance. And again, I don't like this. You know, it's not like we put in a bullish inside bar, you know, like this one that ended up failing. You know, we kind of just chopped around higher, you know, with higher lows, higher highs. So the market's still kind of extended and overbought going into this, gapping up, hanging man. I just don't like this setup here. For the bulls, you know, one of the good things, though, is that the Russell here, IWM, is holding up well. It kind of reversed this evening star that we talked about yesterday. So that obviously did not follow through. And, you know, nice gap up in a surge. You know, this could probably go up there and fill that gap around 198. But, you know, then you're going to come into some more resistance. And, you know, you are overbought here. You haven't put in any supports on the way down. So you got to be careful with the Russell here. But, you know, it acted well today. And, you know, when the Russell leads, it's usually a good sign. The Dow here also gapped above that key 331 area. But again, coming into that big red bar here. And, you know, it still is kind of overbought. This pattern here is a little bit better, though, than the one on the spiders. So it's a lot more kind of right angled, which I like better. So the Dow, I would say, is in a little bit better of a technical position here. But, you know, overall, I don't like what bonds were doing today, and I don't like how tired the markets look here, especially in August. You know, as we get later into August, September are the worst month for the markets returns wise. So I think we got to be careful here. And yeah, we'll just leave it at that. Anyways, let's flip over here. So semis, again, up 4%, so they weren't lagging, but they did sell off pretty hard Monday, Tuesday, and obviously still not making new highs here. You know, maybe it wants to go up here and tag that 250 area if we can make a push up. But, you know, semis obviously on the weaker side after, you know, the sell-off yesterday with NVIDIA. But again, nothing really too new to add here. It was up just like everything else. IGV also had a nice day, so that was able to finally go up and test that 314 candle there. So that, you know, acted well. Again, still coming into this red bar and this kind of breakdown area. So it is into resistance. Obviously, trade desk, just a monster gap and go up 36% here, all the way, closing all the way at 74, up $20 on the day. So big move there for trade desk. Gap and go above the 200. So that obviously helped out there. But yeah, cloud acted okay. Biotech also not making a new high, so kind of looks more like the triple Qs here and the semis, where, you know, we had a nice gap up, but not making new highs, not getting above Monday's high. So maybe a little bit of a red flag. Some of these tech things are getting really kind of tired and extended. I mean, you got to look at, figure, where Apple was, not even 2 months ago, sub 130, and now it's 169. Tesla, which hasn't participated even that much, even that is up 620, got all the way up to 930. A lot of these tech plays have just gotten so overbought and stretched that you're just starting to see signs of tiredness here. Transports, they acted well as well. So again, Med have upside to that 200 moving average. I kind of talked about that as being kind of your max move. So around 15.1, 15.2, and again, you're going back into that sell bar. This was I believe an FOMC date, or perhaps it was back here. Either way, pretty good sell bar here after a failed breakout. And then you got the 200 moving average there. So there should be some good resistance here on the transports. But overall, they acted well pretty much all day long, surged up and then just went sideways the rest of the day. So no real problems at the moment. We talked about interest rates here. 10-year, the yield acted well. So if there was anything that should have made this sell off tremendously today, it was that CPI print, and it was able to reverse. So again, I think bonds are really showing a red flag here. We talked about the 30-year already. HYG did get a bid though, so that is kind of a little bit more of a good sign for the market. But again, it's really all about the 2-year and 10-year right now, if you ask me. But HYG held up okay, so we'll give it the benefit of the doubt for now. Home builders also still not making new highs. I think these are also getting pretty stretched. Maybe they can have another little move up here. ITB did make a nominal new high, but not a closing high. Maybe they have a little bit more upside here, but again, I'm seeing upside as being limited pretty much across the board. VNQ continuing to defy gravity. This has gotten through my $100 level here, so maybe it wants to go up and get that 102. After all, I can't rule that out right now with the light volume. As soon as the volume comes back, and it's going to come back without warning, this will all change. But for right now, these things can go higher than you think, and that's just kind of the environment that we're in the month of August. So we got to respect that for the time being. Financials, XLF, gapped right up, went into that 100 moving average, and basically this is where you broke down. So that's kind of where it stalled out here. Left a pretty sizable gap on the daily time frame, but you did get some good volume there. What can you say? It had a nice day. And we'll just leave it at that there. XBD, the broker dealers, did not make a new high, but this is also just very, very, very stretched as well. So, again, it was up with XLF, but still not making new highs. It's just so overbought here. Crude got a nice little bounce. So it did dip down earlier on the CPI number. Had a nice impressive recovery, still finishing up 1.18% as it sits right now. Kind of stalled out right at this white trend line here. So that was kind of your pivot low, your former pivot. Could be becoming resistance now. So we'll have to watch for that. Again, I'm still expecting another little leg down in crude. So we'll see if we get that. But in the meantime, maybe it wants to trade back up to that 20 and 200 kind of necktie, somewhere in that area. But, for right now, it did have a, impressive little reversal. So we'll give it the benefit of the doubt for now. XLE also, up 75 basis points today. XOP up 1.69, and then OIH as well up 60 basis points. So all the energy plays were up as well. They did dip down earlier though. Again, kind of like on that CPI number. I'm looking at XLE right now. That gapped up and then sold off before recovering. But again, oil seems to be calling BS as well, kind of on this rally. So we'll see moving forward. I'm still expecting oil to have one more dip. But I think it's pretty much over for crude, or for crude bears, I should say. But anyways, nat gas here, nice little bid this morning, was kind of flattish and then got a nice pop in the morning. What can you say? I talked about this trend line here. I said, let's see if it gets defended. It has. If you take out these highs, then you can possibly go up and challenge that $9 area again. But there's still a lot of supply up here in this tail candle. Again, I wouldn't do anything with nat gas at the moment. It's just too stretched and overbought and volatile right now for me to really even have any trade on it. Dollar index did take a pretty good hit. Closed below that 50 moving average. This did come off the lows a little bit. I think this wants to go test 104. So you got a good level there, and you got that 100 MA. So those are going to be your kind of levels there on the downside. You held this green bar low, so that's kind of your positive right now, but it does look to me like that wants to go test that 104 area in the meantime. Gold, you know, came back in off the highs. You know, it was just into resistance and probably needs to do a little backing and filling, maybe put in a higher low before it can get through this red bar, but you know, it sold off a little bit, but no real problem. Same thing with GDX. You know, this, you know, kind of got into these pivots up here. This is kind of a breakdown area. So again, I think it just needs to do a little backing and filling right now. But again, no real issues here for the miners or for gold. Silver also a little bit of an inside day again today. Still inside of this big wide range bar from Monday. And yeah, no issues at the moment. SILJ also decently up as well. So again, precious metals acting well. Platinum also acting well today, up 90 basis points. No problems here. I think this can be bought on dips. And palladium also having a nice little up day as well. Copper here, a little higher low. So, you know, you got that higher high in place. We talked about that. This one's 375. You know, the 50 moving average is probably going to be a stall point here. But again, copper as well. This is another thing here where, you know, if the economy is slowing, and I just feel like these commodities are starting to call BS on the Fed here, especially bonds. But, you know, copper shouldn't be up today with that CPI number. But, you know, it is what it is. But again, short term, 370, 375. We got a nice move off the lows, put in a little pullback, and usually you can get a little push up here again. It was just so oversold at that current level. But, you know, copper hanging in there today. All right, and then let's flip over here. So we got the yields up here. So Bitcoin up 2%, Ether up 7%. So, you know, basically reversed this that action from yesterday. I said I really want to see it hold that 20 moving average, and obviously that pivot down here at 22,515, and it did that for now. So Bitcoin acted well, but again, still no higher highs. So these coins are really lagging the equity markets, which I don't think is a good sign for risk. And it makes sense, you know, all these trading desks, like it's almost every week we get a new trading desk blowing up. So investors are scared to put their money in crypto right now, and it's, you know, generally a little bit of a sign of risk off. So we have to respect that. Ether did get a nice bid though. Again, I've been telling you guys it can go up there and hit 2,000. Nice little pop off that 20 moving average. You're making higher highs. So Ether is holding up well at the moment. But again, I still think upside is pretty limited for the crypto sector and for equities in general. Anyways, let's flip back over to the spiders. So again, you know, you're kind of coming into the January low pivot right now, and I still think you're a little overbought and extended. You have this hanging man there on the daily. Could we, you know, gap down and sell tomorrow? I wouldn't rule that out. Could we also squeeze higher? I wouldn't rule that out as well. It's all about the volume right now. So once we get that volume to come back, that's when this market will, you know, put in some type of a pivot. But until then, you know, we can hold up, and, you know, a lot of these things can possibly squeeze a little bit more. Anyways, guys, going to wrap it up here. Come find me on carnivoretrades.com, and I'll talk to you all tomorrow.